Thank you for your time. This is a video walkthrough of our advanced 10-year financial forecast model template for hotel developments. The model itself includes 10-year forecast, 3 statements, cash flow, balance sheet, profit and loss, various ratios, supporting schedules, as well as assumptions and inputs that are linked to these statements. In addition to that, we have included various valuation methodologies. So in addition to our standard discounted cash flow valuation, we have also included other valuation methodologies to support your decision in terms of the value of the company. It provides a broad range of valuations or values of the company at various exit years, and these are all housed in the company valuation sheet, which we will discuss briefly. So the model itself starts with a user guide that gives a broad overview of how to make any changes to the inputs of this template, the key features that can be expected in the model, as well as important notes when it comes to the functionality and use of the model. The key components of the model are, or the key assumption components of the model are housed in the dashboard and annual projections sheet. So you can see the 10-year projections gives you, number one, here at the top, high level overview of various strategic components linked to the model, i.e. your company value, total funding requirements, cash balances, your cost of equity, your WACC rate, etc. You'll see as well that balance sheet check as well as model error checks have been built into the model itself to ensure that whenever you make changes, everything stays in balance. Another functionality that we've included is we have found that some of our clients don't want a 10-year forecast. They want maybe only to look at a 7-year or 5-year forecast. So what you can do is, as soon as you go to the forecast period, you can toggle the year of projections anything from 5 to 10 years. So you'll see here, as soon as you choose 5 years as your period, all these higher level indicators change automatically, and all the projections that has no relevance post year 5, so year 6, 7, 8, 9 and 10 are automatically hidden for you to make it much more user friendly. So that is a functionality that we've incorporated into this model. Specific to hotel projects or hotel accommodation, you'll see these various ratios that are automatically included for you or calculated based on the inputs. Aspects like occupancy rate, average daily rate, rooms occupied, your gross operating profit per room, RevPAR, TrevPAR, etc. So these are all automatically included for you. The company valuation sheet, which we'll discuss shortly, are also linked back to this dashboard to give you a high-level overview of the valuation of the company. In this instance, we have not just provided a standard DCF valuation method, but we've also included other additional valuation methods for you, with the aim of providing you with a range of exit values for your project. We also found that it adds more credibility to our clients' funding applications or investor presentations. So the dashboard starts with general assumptions, aspects like the starting year of the model, the currency that you want to use. In this instance, the mock scenario that we've included here is based on South African rands, but you can change it to anything you want, British pounds, US dollars. You'll also find as a value-added service that once you purchase the model, the template that you'll receive includes a mock scenario so that you can see the functionality for yourself, and it makes it easier just to follow the logic behind the model. But you can very easily override any of those inputs for your specific project or specific scenario. All inflation factors, taxation rates, working capital inputs, etc. are housed on this sheet, as well as your funding assumptions, debt, versus equity, the debt funding parameters in terms of the interest rate that you will be paying, the loan term, cost of capital, etc. I've mentioned earlier that throughout the model there are read me notes or read notes, read more notes in some instances. This is included just to give you an overview of what you can expect to include in the specific cell. So it gives you guidance notes, and it gives you just examples as well as to what you need to input here. So the operational assumptions quite comprehensive. There are various revenue streams that we've incorporated into this model. So whether it's a large multi-billion rand or dollar type of project, or a much smaller boutique hotel or bed and breakfast, this model will address those issues as well and will be suitable for that. But in this instance, we have looked at all the various components, operating components and revenue streams that you can expect in a hotel setup or a hotel project, starting with the rooms. So you've got the ability here to name various rooms, name your rooms. Maybe you've got suite names or specific room names, as well as the rate per room. The daily capacity per room type you can incorporate here, the annual capacity automatically calculated for you, your percentage occupancy. So if you're a startup, needless to say, your room bookings might be lower than as you grow, but here you can make those amendments in terms of your expected occupancy. The visitors, non-hotel guests. So as an example, you might have facilities that do cater for non-hotel guests as well. Here you can include those assumptions. You might set up a casino. So here we split the casino revenue and assumptions between actual hotel guests and non-hotel guests. And here you will see, as an example with the hotel guests, the number of guests are automatically calculated based on your hotel rooms booked. But additional components here will look at how many times the guests will actually frequent the casino, how many of the actual hotel guests will actually use the casino, your capture rate, average revenue that can be expected per guest. You might have real estate. So in other words, you might have real estate in addition to the hotel that you want to incorporate, that you want to sell, whether it's condos or houses or villas. That facility or revenue component is incorporated into this overall facility. You might have a golf course where there's sponsorships or tournaments held. Once again, split between the actual outside guests and sponsorships versus actual club members. In addition to your hotel, you might have some leasing space for retailers and restaurants. This is where this component will then be quite valuable, where you can toggle between the number of retailers and what the average monthly lease or rental would be for that. Same for the restaurants. The parking revenue based on number of parking bays, average hours spent per person or per guest, etc. Conference room facilities, maybe an aquarium or a dining hall or a water park, horse riding, boat charters, luxury charters. So there's quite a number of amenities that can be incorporated or have been incorporated into this model. Needless to say, if it's not applicable to your project, you can just ignore it, but it is there for your convenience. All these various inputs are then automatically linked to the business model assumptions or the actual projections, and you can see everything pulls through: the room revenue, the conference, real estate, the water park, skydiving, etc., etc. Cost of sales can be amended here based on your specific circumstances, and those are the high level inputs that would be required for this type of hotel accommodation or hotel project. The results are the three statements. So your profit and loss over a 10-year period, your operating expenditures included, your balance sheet, cash flow statement. Additional key financial ratios, liquidity ratios, and supporting schedules are also all of them included in this dashboard. So it does provide you, your management team, or any other stakeholders, funders, investors, with more than enough information required to determine the viability of the project. We've also included monthly projections for the first year, as well as I've alluded to the company valuation a bit earlier. Everything from the dashboard is automatically calculated for you, so there's virtually no input required from your side. And the valuations itself, the unlevered free cash flow, levered free cash flow, everything is automatically calculated for you, and so too the various valuation methodologies. Here you can see the DCF, Gordon growth model, and the various multiples automatically calculated for you. The supporting inputs are basically the funding components, so funding requirements and what it is that you need to fund. In this instance, it would be everything related to the construction of the hotel, or if it's an existing hotel, maybe just additional construction or revamps or remodeling. Any furniture, IT equipment, machinery, vehicles, everything can be housed in this assumptions sheet. Once again, everything based on your available cash that's projected on the dashboard and the inputs that we've made in the earlier sheet. This assumptions funding sheet will automatically show you whether you've got sufficient funding based on the incoming funding structure, which is housed here. Funding structure, any external debt, external equity, own contributions can be amended here, and once again, everything is linked to error checks and sanity checks to make sure that everything remains in balance. Depreciation automatically calculated for you based on your salvage value and useful life per asset. The operating expenditure, once again, here you can decide whether it's monthly or annual fees. You can name the operating expenditures, the individual line items, and this then automatically pulls through to the profit and loss statement. And then labor, split between direct labor and indirect labor. Once again, whatever you input here in terms of headcount, in terms of the year they're being appointed, in terms of the names, etc., are automatically pulled through to the various financial statements. We have, for transparency purposes, included the loan amortisation schedule. So if you have a loan that includes a moratorium period during the construction phase, then that is automatically calculated here for you without any further involvement. It automatically calculates the interest rate as well, interest payable based on the interest rate, and then your principal or capital repayment as well. So thank you very much for your time. I trust this explains and give you more than enough information as to what you can expect when you do purchase this hotel financial model template from Best Financial Models. Thank you very much.